Welcome to The Profit Partner, where we help you grow six-figure businesses in 12 months or less. My name is Cheree Warrick, and I am The Profit Partner. And I'm so very honored today to be interviewing Sarah Pichardo of George Mason Mortgage. Sarah Pichardo is the #3 mortgage broker within that organization. She has risen to the top. She is here today to talk to us about how we can be educated as entrepreneurs about our mortgages, because part of financial success is having personal financial success. So she's going to talk to us today about that, as well as how we can just be smart, because she's had great success with her mortgage business, how we can just be smarter entrepreneurs and work better within our field. So welcome, Sarah.
Thank you, Cheree.
Thank you. So tell us a little bit about yourself.
Well, I am one of 8 children. I grew up in Laurel, Maryland.
Okay.
And I was lucky enough to be able to attend Cornell University, where I met my husband. And we've just celebrated our 25th wedding anniversary.
Well, congratulations. So when is your book about that coming out?
And we just have had a very, very lovely time together. We have 3 beautiful children.
Okay.
My children are now 20, 22, and 24 years old.
Wow.
And we've lived abroad.
Mm-hmm.
My husband worked for AT&T, and so we traveled quite extensively.
Mm-hmm.
And now we're back in the States.
In the good old US of A, right?
Doing mortgages now.
And you grew up in Laurel, so you ended up back where you started.
This is true. All around the world to come home.
So you are a mortgage broker. How did you get into mortgages itself?
I actually didn't ever plan on being in mortgages. It just kind of happened very unexpectedly. After traveling and coming back to the States, I wanted to be doing something. I found myself literally in the kitchen cleaning a coffee pot with a Q-tip and thought, oh, I'm an educated woman. Why am I doing this? I need to be getting a job. Mm-hmm. We'd raised our children to be independent, and what a surprise they are.
Yeah.
So I went and looked for a job, and was pretty much laughed at. They told me, do you have this skill, that skill? And I'm like,
So you weren't the secretarial type.
No, I was not the secretarial type.
And unfortunately, as mothers, a lot of mothers do experience that, where they've been out of the workforce for so long. But you're laughing now, right?
I'm laughing now.
So what happened? How did you get into mortgages?
My daughter plays the harp, and I went to her concert, and I had been praying for something that would really be fulfilling for me. And at the concert, I had one of my daughter's best friends' mothers came in very hurried and rushed, and she said, we are so busy, I need desperately to hire somebody, we have got to get some help. And I looked at her and I thought, I need a job, I'm available. And she said, well, can you start on Monday? And I said, sure. And then afterwards, the music began, so we were quiet, and then the whole concert, I was thinking and thinking, and finally the concert ended, and I said, what do you do? And she says, mortgages. And I said, oh, I can do that. And she says, oh, don't worry, we'll train you.
Yes,
and
yes.
So that first year that I was there, I ended up being one of the very top producers. I was Rookie of the Year at that company.
Fantastic.
And I found that I really think I found my niche. I absolutely love what I do. I think it's very important to educate people, to make sure that they really are getting into the very best program that they can get into. And the more that they know about mortgages, of course, the better decisions, financial decisions they can make for themselves.
Right, which is the whole premise of this conversation that we're having here, is to make smart business decisions. And that's one of my missions in life, is to help people do that. So one lesson that you just stated that I really want to point out to everyone is the power of a network. If you had not been in that place at that time, and obviously if she said you're hired, she felt very comfortable saying that. It's amazing to me how a powerful network can really help you move to the next level. So I just wanted to point that out to all of our entrepreneurs out there, that was lesson #1 that you just reiterated.
Couldn't agree with you more.
So, okay, first of all, our mortgage, our home, is probably going to be the biggest investment that we ever get
Correct.
into. Okay. How can we protect ourselves? What are some of the things that we should know about mortgages?
To begin with, you want to make sure before you go into a mortgage that you understand completely the program and your level of risk that you're willing to take, and work with someone who is very reputable that will show you all the different options that you have and go through the pros and cons, because each program does have the good and the bad, and you need to know what they are. You also want to be absolutely certain that you're in the very best position for your mortgage when you go in. So one of the first things that I do when I'm taking my interview with a client, of course I have to listen to what it is that they're looking for, what they're needing, and then I kind of explain to them that a mortgage is very much like a chair. It has 4 legs, and a mortgage has 4 legs.
Okay.
My 4 legs of my mortgage are your credit score,
Okay.
your debt to income, your loan to value, and your documentation.
Okay, and you're going to have to go through those one by one for us so that we fully understand. Now, this is the whole process of us getting into the mortgage.
Right.
So the first one is the credit score.
Right. The credit score, it impacts everything, much, much more than people really realize. It impacts the interest rates that you get on your car loans, on your credit cards. It impacts, of course, your mortgage. It can impact your job. The employers do.
That's true. They're starting now to look at credit scores, yes.
And then also your homeowner's insurance also is impacted by your credit scores. So it's really important to make sure that your credit is absolutely at its very best and that I can present the best picture to my underwriter. And so the first thing we do is we look at the credit and we try to determine if indeed there is anything that we can do to improve the credit. We have very special software that actually goes into Equifax, TransUnion, and Experian. And we can do simulators for what if, so I can help a client to know if they were to pay off certain debts or pay down, or whether they were to close accounts. All of these things can change the credit score and make them more favorable for the interest rate.
Wow, that's fascinating. Now, is that a George Mason product, or is that something that's used all over?
I think many lenders do have that available.
Okay.
I just use it regularly. It is something I never charge my clients for. I feel like it is best to present them with the very best possible way, and so it's just part of the service that I give.
Right. Now, so many people do have credit issues. So what are some of the tips that you have for helping people increase their credit score?
It really depends upon the situation. When I'm looking at a credit history, if they've had any lates, perhaps it may be only a one-time late, and sometimes they're able to ask their creditor for a one-time exception. Perhaps there's misinformation on the credit report. So we first go over to see whether all the information that is being reported is truly accurate. Then we also look at their credit balances, because their credit line to their current balance is also important. Whenever one is over 50% of their credit line, then that also will impact and lower their score. So sometimes it could be something very simple as we look to see how long they've had that particular line, and if the creditor might be willing to even increase the credit line. So there's some things that you can do without even putting any money out at all.
Right.
There are times when things are inaccurate, and we will dispute those items. The times that things are paid off that are not being reported properly, and these are all things that we can do, as well as possibly closing different accounts or opening up accounts can also sometimes help. Sometimes our clients do not have enough open trade lines. So it just depends upon what I see.
Right, as far as the person, it's a case-by-case basis.
Exactly.
Sorry. So that's the first leg. What's the second leg?
Documentation.
Documentation,
Documentation is incredibly important right now. There was a time, a couple of years ago, that one could come in and say, I make X dollars, and I'd say, thank you, I believe you.
We wonder why our mortgage industry is in crisis.
Well, we also believe you, but within a certain limit.
Okay.
If one were to be within a certain job type, we would expect a certain income from there. So there is also a level of believability also, and responsibility with the loan officer when one is working with a stated income product. However, at this time, and I think it's quite good that we are really seeing the lender's tightening the guidelines and making it much more accountable for what the people are buying, making sure that they're really not getting into more of a home than they should be in. A lot of times I can still approve for someone for more than what they should really, truly purchase. So I work with them also, not just with what the bank will allow, but also with what they themselves have, what their goals are.
Right.
And we will do this through the documentation. When I'm talking with them, I will ask them for their bank statements and their paychecks and their W-2s, their federal tax returns. And through looking at all these different documents, we can really ascertain whether or not they should be in that type of a mortgage.
Right. And even if entrepreneurs don't have W-2s, you still are able to work with them, right?
Correct.
Okay.
Correct.
Based on their tax returns and other documentation.
Right.
Okay. Yes, like if I have that $100 million government contract, it makes a difference, right?
It certainly does.
So what's the third leg?
We also have your loan to value. The loan to value is the amount that you're borrowing to the value of the home. And we look at whether you're putting money down. There are still programs that are available for first-time home buyers that are 100%, if you can believe that, even in this market. But these programs are really, they're very special programs for the low to moderate income families.
And what's low to moderate?
In this area in Northern Virginia, it would probably be, for a single or a family of 1 to 2, about $86,900.
Oh, which is not so bad.
Not so bad. And for a family of 3 or more, it'd be $100,000.
That's still not bad.
And the interest rates are very attractive. They're under the normal rates, and especially these programs are available through VHDA, which is the Virginia Housing Development Authority.
Okay.
And they are, they're also special things that we can do with the county. We look at the different programs. Many of the counties in this area also have programs that are there for the people to help them to come into the county, make the housing more affordable, especially for the teachers and the firemen and your
and our
policemen,
public servants.
Your public service.
Which we want that for our public servants. So
exactly.
I do agree with pay raises for all teachers. I'll put that PSA in now.
Absolutely.
And then the fourth leg.
It would be your debt to income. The debt to income tells us whether or not you can afford the home. This one is probably one of the most important ones. The ratios that the banks feel very warm and fuzzy is 28-36. What that means is 28% of your total gross income is being used for your home.
Okay.
And 36 would be your car payments and your credit card and your all the other things that you might have, your student loans, etc. The minimum payment that you must make plus that monthly mortgage payment, we add that all together and we divide that by your total gross income to determine whether or not it's a comfortable loan for you. There are times when the lender can go higher if you have compensating factors, if you have maybe great credit scores, or if you have shown a history of good savings, if you have job stability. There are times when one may wish to go to a little higher ratio. There are times when, for whatever reason, a couple may not have one of the spouses on the loan, yet the income is in there, and so those are the times when I can go and look at the possibility of maybe increasing those debt-to-income ratios some.
Okay, all right. So we've gone over the 4 legs. Is there anything else that we should know as far as mortgages are concerned?
The programs. Just be aware that a 30-year fixed, there are many types of 30-year fixed. There's the 30-year fixed, which is an FHA loan. There is the 30-year fixed, which is a conventional loan.
Okay.
You have interest only, 30-year fixed, where the first 10 years are interest only. So they're very, very different 30-year fixed. Even within the traditional conventional 30-year fixed, different programs also can have different features that may work better, and I may choose one program over another depending upon what my client presents.
Right. So at the end of the day, even with business, we always start off with the goal. and we were interviewing a real estate investor that talked about this, where he sits down with the person and what's your goals. So it seems like you would do the same thing.
Exactly.
You know, is the person more concerned about the interest rate, or are they more concerned about how much you're spending every month, or the neighborhood, or
the cash to close? All of these things are pieces that we must also look at and make sure that we have the very best fit for each of the clients.
Yeah. Tell us some success stories, because I know you have quite a few under your belt. Let's start off with someone who was young, maybe, you know, just graduated from college. I want to get into my first home.
Right.
And I have to say, I wish I had bought my home right out of college. I wish someone had pulled me aside and said, we're going home shopping today.
Yes. There's really no need for a young college graduate to rent. They can go right from their degree, if they're have received an offer letter, and we can actually do a closing, and then with them having that letter, the offer letter, and we can use their first paycheck post-closing, even if necessary. So they can literally go right from college to their job and into their home without ever renting.
Wow.
So it's very, very powerful. The programs also, the first-time home buyer programs, allow gifts. They are very, very much more forgivable, I guess, or their guidelines are a little bit easier. We're highly documented, but they are much more, I guess, beneficial to those first-time home buyers. They don't have to have the 2 years. Normally, a lender wishes to see 2 years of where you've worked and where you've lived. And of course, a college graduate has not had the job history yet, so it allows them just to go right into that program.
That's great. So you were talking about gifts before. That is, if mom and dad decide to use that as a graduation gift, a little bit of the closing costs or something like that, right?
Exactly.
Great. You have any success stories about young people who've purchased?
We have had many people here, and even in this area in Northern Virginia, who are able to go ahead and, young lady, right out of college, and she was very excited. She just gotten her offer letter, and we were able to really close her, and she got a beautiful interest rate on a 30-year fixed, and she's set. And matter of fact, that was about 3 years ago for this one I'm thinking of right now, and she's now married, and they're going to be using the home that she had originally purchased as an investment property, and now she and her husband are in the process of buying their dream home.
Well, that is great. That is great. So she basically had an asset that she was able to bring into the marriage, which I think is phenomenal. Now, for some of us who are credit challenged, do you have any success stories about how you've been able to help someone get into a home?
Absolutely, daily. We do this every single day. We work with the clients. The software, like I said, that we have is very powerful, and it allows us to very quickly determine whether or not we can get these increases. And what's very nice is once I receive the letters from the creditor where the corrections have been made, we can do a rapid rescore, and usually within about 3 days we're able to go ahead and get their scores reported correctly, and then we're able to go ahead and proceed.
Wow, great. So tell us a success story about credit challenged person who was still able to buy. Sorry.
We had one who just with one quick little letter from they were one time late on a car loan, as a matter of fact, and we were able to raise their points within 1 week, 100 points, and this was enough to go ahead and allow them to be in a 700 credit score, which gave them the very best pricing available.
Wow, wow. Now, part of the Profit Partner is helping us become better entrepreneurs. And I know that you know, one thing that I admire about you, and I'll tell anybody that, you know, you have to be an expert in what you do. And one thing that you do is you really keep up with the industry, what's happening in the industry, and being able to relate that information to your clients is really, I believe, one of the things that's really helped you get to the top of the mortgage industry. So no matter what industry anyone is involved with, we would really like to know your keys to success of being an entrepreneur.
You're right. Being up with all the changes, especially in a market like we are having right now, knowing all of the programs that are becoming available and being able to assimilate them very quickly into our normal business practices. The stimulus package is a very good example. The interest rates are very, very competitive. They are still the regular conforming loan rates, and now with the loan limits being increased, it allows people to buy more of a home at a very, very reasonable rate.
Great, great. Any final comments in regards to success as an entrepreneur and as a mortgage professional?
Oh, I've just been very blessed. Working with the clients, I think listening to what their actual needs and desires are, paying attention to that, putting their needs ahead of your own, and I think really just planting seeds. It is really, little fish grow up to be big fish.
Yeah.
And if you just treat people properly and right, then they come back to you. I'm all referral. Everything that I do is
wow, that's fantastic.
Based.
That's fantastic. And we know that when someone is referred to us as entrepreneurs, the closing rate goes up, I think 80% or something like that was a study that I had read. So being 100% referral is very, very powerful.
I've been very fortunate.
Yes, yes. Well, thank you so much for joining us tonight and educating us on mortgages. My name is Cheree Warrick of The Profit Partner. Again, we help to grow six-figure businesses in 12 months or less. We do welcome you to contact Sarah Pichardo at George Mason Mortgage. Her information is down at the bottom of the screen. Again, Cheree Warrick from The Profit Partner. Have a very prosperous day.